Ladies and gentlemen, good day and welcome to Satin Creditcare Network Limited Q2 and H1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. H.B. Singh, Chairman cum Managing Director of Satin Creditcare Network Limited. Thank you, and over to you, sir.
Thank you so much. Good evening, everyone. Thank you all for taking the time to join us and discuss our financial results for Q2 and H1 FY23. I hope you and your family had a great time during the Diwali festivities. I'm hoping that you could get a chance to go through our quarterly results and investor presentation. Those who have not seen them yet can access the same via our website and stock exchange. During the first half of FY23, we are delighted to share that with you all that we have addressed all the asset quality concerns which emanated due to COVID-19 pandemic and the high inflationary environment. This was possible because of the resilience of the people we serve as well as the dedication and innovation of our team, supported by bounce back in economic activity. The restructured book has reduced from 1,151 crore as on September 21 to rupees 318 crore as on September 22. In percentage terms, reduced from 21.4% to 6.4% of on-book portfolio as on September 22. The reduction in restructured book is a result of rupees 495 crore of collections and rupees 338 crore of write-off done from this book. As on September 22, 62% of the book amounting to rupees 197 crore out of the 318 crore is zero DPD, 22% is in 1 to 90 bucket, which is 70 crore, and the balance 16% is par 90, that is 51 crore. The company has created provisions amounting to rupees 76 crore on this portfolio. We do not expect any further stress in this portfolio. The on-book GNPA of the company stood at rupees 198 crore, that is 3.96% of on-book portfolio, down from 8.71% as on September 21. Assam constitutes 70% of on-book GNPA, and excluding Assam GNPA as on September 22, the GNPA stood at 1.2%. The successful completion of disbursement to Category 1 and Category 2 borrowers under AMFIRS, we believe that the relief to Category 3 borrowers will come in as per MOU signed. In fact, the government has released relief under Category 2 yesterday. To give you some more sense on the asset quality of new disbursement, par 90 addition of portfolio originated from loans disbursed from July 21 onwards is just a mere 0.2%, representing 84% of on-book MFI AUM as on September 22. The company has maintained sufficient on-book provisions amounting to rupees 148 crore as on September 22, which is 3% of on-book AUM. The company has written off loans amounting to rupees 209 crore during Q2 FY23, totaling to rupees 483 crore during H1 FY23. The write-offs done during Q2 FY23 were primarily from the provision, hence no hit to the P&L. Further, during H1 FY23, we have collected rupees 16 crore from written-off loans. On the operations front, we are experiencing an uptick in our disbursement. For the period under review, our disbursement was at rupees 1,709 crore on a consolidated basis, up by 30% from 1,315 crore in Q2 FY22. With disbursement back on track, we expect growth to come in the coming quarters. The company has started acquiring new clients, and as a result, 37% of standalone disbursement in Q2 FY23 was to the first cycle clients. Gradual pickup in the disbursement led to 3% growth in consolidated AUM, which now stands at 7,575 crore. The standalone AUM stood at 6,417 crore. It grew by 2% on a year-on-year basis. This growth is despite a write-off of rupees 483 crore done in H1 FY23. Pre-write-off growth stood at 9% on a year-on-year basis for standalone AUM. As on 30th September 2022, the company has a CRAR of 24.1%, up from 22.6% as on 30th June 2022. During the quarter under review, the promoters infused 25 crore against conversion of warrants. Till date, the company has received 100 crore out of rupees 225 crore of preferential allotment via issue of equity shares and fully convertible warrants. The company continues to maintain a healthy balance sheet liquidity, rupees 700 crore of surplus funds, and has undrawn sanctions worth rupees 445 crore. Out of the undrawn sanction, the company received 140 crores on 3rd October 2022. We have constantly evolved over the years by putting a significant emphasis on customer-centric technology. The driving force behind this is to bring technological solutions that enable seamless experiences as well as to work at the grassroots level to empower our clients. With this intent, the organization has moved towards a more robust, scalable, completely paperless technological journey with the advent of AWS and eKYC into the system. The microfinance industry stands for financial inclusion while also contributing to impact and sustainability, which is the basis of all-round growth and the economic development of any society. Our work is a reflection of our commitment to this first principles thinking. We put all our energies towards creating social impact by way of serving the unreached population and contributing to social development goals or SDGs 1, 5, 8, and 10 as the core of our business. We over the years come across as one of the largest NBFC MFIs in terms of numbers of customers and our presence. As a progressive institution, we have always employed innovative approaches to secure the trust of all our key stakeholders. It makes us happy to share that our CSR initiative contributed to women empowerment while promoting education and equal opportunities. We also try to support the community during distress time. We are committed to ESG as our guiding principle. We believe our conviction, passionate workforce, experienced board, and healthy asset quality will help us achieve sustained growth and ensure the overall development of all our stakeholders. Going forward, with solid ground in business, we anticipate strong growth momentum in terms of disbursement, collection, and steady AUM progress quarter on quarter. Now let me run you through the financial and operational highlights of our company. Starting with the consolidated operational highlights, our AUM 30th September stood at 7,575 crores. We have a customer base of 26.8 lakhs as of 30th September 2022. Our disbursement for the quarter stood at 1,709 crore as compared to 1,315 crore in Q2 FY22. Our assigned portfolio stood at 1,413 crore. As of 30th September 2022, 100% of our disbursement is made through cashless mode, while cashless collection stood at 5%. We have also adopted website payment option and UPI auto debit. Standalone operational highlights. Our standalone disbursement for the quarter stood at 1,564 crore as compared to 1,103 crore. With a gradual pick in the disbursement, we expect growth in the coming quarters. Our average ticket size of FI lending for the quarter stood at 43,000. Talking about our collection efficiency, our collection efficiency trends are as follows. Q1 FY23, 97%. Q2 FY23, 100%. The collection efficiency of Q1 and Q2 FY23 is excluding restructured portfolio. The collection efficiency on restructured portfolio H1 to FY23 stood at 77.6%. We have a well-diversified customer base, a well-penetrated branch network of customers, and 76% rural exposure. On-book GNPA reduced from 8.71% as on Q2 FY22 to 3.96% as on Q2 FY23. Rupees 466 crore to rupees 190 crore. Out of this, rupees 136 crore pertains to SR. Our restructured book stands at 318 crore, which is approximately 6.4% of the on-book AUM. As of 30th September 2022, our total branch network count stood at 1,237 branches, which is spread across 397 districts. We have a total state and UTs count of 23, which makes us a well-diversified pan-India microfinance player. As of 30th September 2022, 96.5% of our districts have less than 1% of portfolio exposure. We have seen a significant reduction in our portfolio risk in terms of exposure to top 4 states, which contribute 54% in Q2 FY23 versus 77.3% in FY17. Our well-thought-out diversification strategy has enabled us to sail through difficult situations and capitalize on our idea of enriching our clients' lives through financing of various products. We have disbursed around 23 crore during H1 FY23 under the product finance category, which includes loans for bicycles, solar products, home appliances, consumer durables, and water and sanitation. Now an update on subsidiaries. The business correspondent services under Tarashna Financial Services has an AUM of 612 crore. As of 30th September 2022, the company operates through 157 branches and has more than 3.3 lakh active loan clients. Satin FinServe, our MSME arm, has an AUM of 184 crore with 3 consecutive profitable years. CRAR of 58.8% and gearing of 0.8x. Total net worth stands at 111 crore. Satin Housing Finance Limited has now reached an AUM of 362 crore, including a DA of 24 crore, having a presence across 4 states with 4,291 customers. Satin Housing has a 100% retail book comprising 64% affordable housing loan and 36% of LAP. The company has 17 active lenders, including NHPD Finance, CRAR of 59.5% and gearing of 2x. Total net worth stands at 122 crores. The quality of portfolio remains intact with GNP of 0.4% as on September 22. Just to update you on amalgamation of the 2 wholly owned subsidiaries, Narashna Financial Services Limited and Satin Finserv Limited. The order against the first motion application was pronounced on hearing dated May 17, 2022 by Honorable NCLT. Further, both the companies have filed joint second motion application Honorable NCLT on May 25, 2022. The said joint second motion application was admitted by Honorable NCLT in its hearing dated July 8, 2022 and issued necessary direction of serving notices and newspaper advertisements. The company has served the notices to government authority and completed publication requisite newspaper as per order. The next hearing is on November 25, 2022. Lastly, with the worst behind us, we are poised to embark on the path of growth and profitability. With this, I would like to open the floor for questions. Thank you so much.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Any participant who wishes to ask a question may press star and 1. The first question is from the line of Himanshu Taluja from Aditya Birla Sun Life Asset Management. Please go ahead.
Hi, sir. Thanks a lot for giving the opportunity. So just a couple of questions at my end, and congrats for the quarter. Firstly, out of the total restructured pool of 318 crore which you have, where you have mentioned in the presentation that around 197 crore is out of the DPD, is in the zero DPD category. What is your expectations of the remaining pool of around 120 crore? How much you expect this to slip or convert into an NPA?
See, Himanshu, this is seen technically about, if you look at it, about 6 months of repayments, which is about 12 installments which has come in. That is the reason why the zero DPD technically will not slip. That is what our, understanding is. That 197 crore will remain over there. PAR 1 to 90 is close to about 69 crores. Our own sense is, as per the ECL formula which we do, technically about 30 to 40% just slips from there basically. So if we even look at that happening across over there, which we feel is also a high number, we have about, let's say about 30 odd percent, which is about 18 to 20 crores which will move from there. On the PAR 90 plus, we again have where about 45 to covered in terms of our collection efficiency. That's what the numbers have indicated for the last 4 to 5 years. So our sense is that, we still have just maybe about 20, 25 odd crores, which will probably be there in the PAR 90 book across over there. And we have provision worth 76 crores for both these categories. So our sense is we are, in fact, over provided in terms of what the restructured book which stands right now.
Okay, sure. When are the most of the restructured book are now, I think it's come to an end, and most of the asset quality pain is over with our collection efficiency is also now back to the pre-pandemic. So what sort of credit cost that you expect basically now incrementally on a steady state basis for the business now? And how you expect this FY, the remaining second half to pan out?
See, whatever pain we had, we've taken it, to a large extent. So what we don't, expect any further credit cost to probably come in this year as such, Our own sense is if you look at the dynamics of the new portfolio which we are making from July 21 till date, our PAR 90 is just 0.2%, So even if I extrapolate that into maybe double, triple, or whatever you call it, the credit cost in the further years, my sense is close to about 1.25%. That is where it is, and that's what my guess is looking at the portfolio quality, which is happening now post the pandemic, the way we've discussed, So our sense is, just to be on a very conservative side, it has to be around 1.25 to about 1.50, which again, if you really ask me personally on a one-to-one basis, I will not adhere to that, because our whole thought process is to bring these NPA numbers down to the levels which is there. And in fact, if you look at the numbers which are there as 0.2%, probably states that which is there of the new portfolio which is being now made.
Okay, and what's your loan growth? How you are seeing the loan growth now? Given the second half to be better for the MFI business, what's of the loan growth that you expect to end the year with?
See, normally what happens is most of the disbursement technically happens during the H2 of every year. So our sense is and whatever write-offs we had to do. So what we've written is that we had a pre write-off growth of about 9%. Our sense is if now the write-offs have taken place to a large extent, we don't have any further write-offs which we feel would probably come in. I think we still stand by about a 10 to 50% growth, which is going to be there, for sure, of the rest of the year remaining.
Okay, sure, sir. Yeah, thanks a lot from my end. That's all.
Thank you.
Thank you. Before we take our next question, we'd like to remind participants to ask a question, you may enter star and 1. The next question is from the line of Ritesh Vatrana, an individual investor. Please go ahead.
Hello, good evening, Mr. Chairperson.
Good evening.
Yeah, actually, I have a question with regard to optimization of the equity in the company. So, for example, if I see the equity statement for the standalone financial statements, it's higher as compared to consolidated financial statements. So, what I understand is because the company has done the fair valuation of the subsidies, as a result, the profit is coming from a forward perspective also, while the consolidated will be in the historical perspective. And then when I see further the additional investment done in the housing finance company, it has a premium of 198%. So, what are the steps you eventually want to take across? So, basically, because the market is discounting the share price as compared to the book value. While when you see the additional investments being done, for example, housing finance company, it has premium to the par value. So, what are the steps being taken by the management to take care of this?
So, I think, Ritesh, our sense is, I think, if you look at the history of our 4 years of the housing book, technically whatever premium which is being fair valued by SEBI 1 category registered valuer, probably looks at what an investment would do in terms of, even if you go to the other method of not having an opportunity cost to it or the opportunity income to it. That is only the fair value which we've practically been taken across over there. And for a young organization which has got so much of capital and a 0.4% GNPA, I don't think so. The fair valuation probably has somewhere which can be discounted by the investors in terms of the share price. In fact, my view is completely the opposite. I think for people to really understand the value of what the subsidiaries are creating, I think just looking at the share price or maybe by looking at other factors, it probably does not give you the right sense. But our sense is the way we've invested into these two subsidiaries of ours and the way they are shaping up in terms of both portfolio quality as well as disbursement as well as the category which they serve in. My sense is, I think, that monetization will happen at some point of time, and it's only for, I think, real values to really understand the values of both these subsidiaries put across together. That's my limited answer to this.
Yeah. So, Mr. Chairperson, going forward on this, so for example, what are the steps you think can be taken from the directors and management perspective to basically upscale the interpretation of the stakeholders in the valuation of the company? For example, do you contemplate to come across with a bonus issue or something different in that aspect? So, because if I see the paid up share capital is very less as compared to total equity size of the company, even the standalone financial statements. So are there pipelines, any thoughts on that, on bonus? Secondly, are there any thoughts with regard to the dividend distribution policy? Because there's no dividend distributed by the company for quite a long time. So what are your thoughts on those areas?
Ritesh, my sense is I think you have to do your homework a little bit more in terms of understanding how an MFI operates and how the subsidies are related to the MFI operates. Technically, I haven't seen any MFI technically giving out a dividend or somebody giving out a bonus. So I think these are theoretical questions which we are talking about.
Okay.
Our own sense is what you have to understand, and I think for the overall thought process which is there, I think it's the business which we focus upon. The way we are focusing on the business post the pandemic, I think that's one statement which we've given out across over which says that our July 21 disbursements has a portfolio quality of 0.2% of GNPA. I think that's a very big statement which we made. In terms of our GNPA which is there post the pandemic, we've taken care of all the write-offs which have happened, all the pain which has happened. And today, if I exclude Assam is a separate category of thing which is happening across with the MOU being signed with the Assam government. So we have no qualms that we will not get the money back from the Assam government, which will come in. The category 1 and 2 has already come in. My sense is if you look at the GNPA post the pandemic, after all write-offs and everything which has happened, it's just 1.2%. I think it's probably one of the best in the entire industry. That is what we want to focus upon. I think, for us, I think bonus shares, dividend, I think if the results speaks for themselves and the quarter speaks for themselves and the business volumes speak for themselves, I think that's the sufficient ground for us to look at how this probably has to be looked at.
Thank you very much. I have one follow-up question on this. So with regard to the digital wallets being introduced by RBI, so is the company planning to do something on that front also?
See, technically we are technologically very sound in terms of creating our own wallets, our own websites, as well as our own mechanism of, actually doing transactions through cashless collection mode as well as the cashless disbursements which you are doing. I haven't had too much of a look into what the RBI wallet is all about, but if it is significant for us to probably encompass into our own technology level, I think we have all the expertise in our technology levels to probably look at it. But I clearly, to be very honest, I don't have an idea too much about what the RBI wallet is all about, because we have our own customer service app, we have our own app, we have UPI too, we have various other mechanisms in which we can actually make a digital payment for our borrowers for collection, etc.
Thank you, sir.
Thank you.
Thank you. We'll take a next question from the line of Ronak Singhvi, a retail investor. Please go ahead.
Hi, good evening. Good evening, Mr. Singh. Very happy Diwali to you and the team. Sir, a few questions. Specifically on Assam portfolio, just wanted to get some sense on the GNP of 137 crores.
Sorry to interrupt. Mr. Singhvi, if you're on a speaker mode, can you switch to handset and speak? Your audio is a bit muffled, sir.
Okay, just give me a second.
And if you could repeat your question as well, please. Thank you.
Am I audible now, clearly?
Yeah. Yeah.
So my first question is basically on the Assam portfolio, on this 137 crore of JNPA. You mentioned that, and also in the presentation, the category 1 and category 2 relief has been given by the government. So this 137 crores, out of which, how much we are expecting in category 2, as you mentioned, it has been released yesterday, and is the balance we'll recover everything in category 3, or will we have eventually any write-offs in this 137 crores?
I think some numbers I think Jugal will probably be able to give you, but just to give you a insight. So category 2 is the overdue amounts, based on a certain cutoff date in which the government paid. It's not much in terms of, I think, I don't have the exact figure, but it's a very less amount technically which has been released by the government. The underlying position is that, since there are 3 categories, the the more I think volume is in the category 3 borrowers, in which all the overdue I think amounts will be repaid by the state government to us, basically. So that is the main one. But the fact of the matter is that once the category 1 and 2 have been released in probably a good time, I think category 3 is also there. I think we're getting feelers of giving our data to the state government now. So I think that work is also starting now, which indicates that we'll probably be there. In terms of numbers, I think it's good to give you insight.
So just to give you an overall sense, as per the original MOU signed, the cutoff date was March 21, which, after due discussion and the time elapsed, has changed now to July of 22. So a lot of borrowers have moved from category 1 and category 2 to category 3. So most of the relief now is expected in the category 3. And then based on our best estimate, we have already provided for a large part of 137 crores. So we do not anticipate, any further hit coming in and coming from Assam. So we have provided for almost 70 odd crore on the Assam portfolio. And our best estimate is that the relief in category 3 will be much more than the unprovided portion out of this 137 crore.
Sure. So out of this 137 crores, how much is, from the policy perspective, how much is recoverable if everything goes well? So that will give us a sense of whether there is a over provisioning or there is a cushion in there.
I can probably say that, so our sense is that out of that 137 crores, we are expecting close to about 75 to 80%. 80% is what our belief is that we will get back from the state government. And that's the reason why we are on a conservative basis, we've taken a 50% provision onto that. So we are hoping at least whatever we get from the Assam government, it would be close to about 75 to 80%. So that's the reason why we provided about 50% of that. So in any case, we are overly provided also in terms of what we get back from the government.
So thank you. That helps. And we are expecting this in a best case scenario by end of the financial year.
Yes, I sincerely hope so. Yeah.
Okay. Thank you. So one question on, so you the promoters have converted the warrants and paid up their share. So there was also the venture in capital investor in Florentry, which had also subscribed to these warrants. So when is the management planning to call that money, because the debt equity ratio is relatively higher compared to the peers in the industry. So that capital will just help you propel the next level of growth. So if you can indicate any timeline, it will be helpful.
Both promoters and the investor has time till July of next year. So it's not our call. It's basically the call of either the promoter who are the subscriber to warrants or the investor. It is their choice when they want to get it converted, and the lock-in will start from the time we allot them, and those shares are we get the permission to trade them. So it's the investor's call when they want to put in the balance money, but statutorily they have time till next July.
And the other thing, I think, what is there, we technically have a capital adequacy of about 24%. I think, we are in no hurry probably to look at it. Once the growth starts hitting it, and I think, if it can be done, then both of us are, probably, ready enough to bring in the required desired capital for growth.
Okay. Thank you. So, one more question on this, the write-off there, as you have mentioned that there have been recoveries of 16 crores in this quarter. So, what are we expecting from a future write-off recoveries perspective? Do we expect a similar run rate, because we have written a huge amount over the last few quarters? So are we expecting a similar run rate, or do we expect better recoveries, or do we expect the recoveries to be much leaner from the write-off book?
So don't ask me, this is, if it's a one-to-one question, I can probably give you a much optimistic figure. But, since, I think, I've got, a thought process to it, let's keep it conservative. That will practically be the same amount which probably will come in. But our endeavor is always to bring in much more what we can do, and God willing, I think, we probably will be successful in doing that.
Sure. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hello, am I audible?
Yeah, loud and clear.
Okay, great. Hi sir, thank you for the opportunity. So my first question is, why was our loan book flat quarter on quarter, and when can we start seeing the growth here? Maybe from Q3, will fair to assume?
यार थोड़ा सा तो वो दे दो, इतना सारा राइट ऑफ कर दिया, इतना पेन खत्म कर दिया, अब फ्लैट ही रहने तो बहुत अच्छा नहीं है. But I think for us, I think the pain is over. I think we were more focused towards that, rather than looking at disbursing during the end. Probably the first 2 quarters are always kind of easy on the in terms of our disbursement. But yes, I think the last 2 quarters will be pretty good. So we're looking at growth from there on, and we don't have any further stress which is left in our books. So I think we'll probably now focus on this going forward.
Okay. Also, sir, the interest expense has actually this quarter, while your interest incomes has increased. So could you please throw some light here?
So one that we have done some direct assignment transaction where the net income goes to the top line. But just to give you an overall perspective, because of the risk-based pricing, etc., blended yield is expected to slowly go up. We have already started seeing some upside in our interest revenue. We feel that on a slightly stable basis, this will go up by at least 1.5% or so over a period of time. On the cost of funding side, from last year fourth quarter to this first half, the cost of fund has gone up by 60-70 basis. So net will be benefited with the free pricing and NIM will improve over a period of time.
Okay. And I think management gave a guidance of around 1.25 to 1.5% credit cost. So is it for H2 on an annualized basis?
Guidance नहीं दिया यार. I just said it that look at the numbers, and that is what I said. If you extrapolate it, that is what it is.
That's after the write-off.
But after the write-off, but our sense is that I think just repeating it again. We look forward that we'll be able to manage our current book, which is now 84% of our portfolio. I think we're working towards asset quality to a large extent. I think we will maintain that, and hopefully the credit cost will be within the range what we mentioned.
Okay. And sir, could you please indicate what levels of cost to income ratio are you looking ahead?
See, I think till the time we are looking at maybe extra manpower to look at write backs and other various things from where we can get bottom line significance in terms of numbers through these write backs. I think it'll be slightly elevated, but we've brought it down. It's I think our own sense is that once the AUM denominator starts increasing, I think our OPEX in terms of percentages will also start decreasing from there. Cost to income will also probably have the same because of the increase now pricing which is there. I think we'll probably have some favorable impact on that also. My sense is whatever the cost to income ratios are now, that will start dipping down from the quarters now ahead.
Okay, that was good. Thank you, sir. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the floor back to Ms. Aditi Singh, Head Strategy, for closing comments. Over to you.
Hi, good evening, everyone. And thank you for coming on this call, taking out time on a Friday evening. I thank each one of you, and I hope we have addressed all your queries through our presentation, through the speech and the question answer that followed. In case there is some other information or clarification you wish to seek, you may reach out to me. My name is Aditi Singh. I head strategy for Satin. You can also reach out to my colleague, Ms. Shweta Bansal, DGM Investor Relations. Our details are there on the website. So that's it for today. Stay healthy, stay safe, and bye-bye.
Thank you. Ladies and gentlemen, on behalf of Satin Creditcare Network Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.